Okay, welcome. We're just going to be doing a quick webinar, probably be about, I don't know, 30 minutes. It's going to cover Fibonacci. Fibonacci was, I'm not saying invented by, but most of the credit goes to a gentleman known as Leonardo Bonacci. I can't say it. He didn't invent it, he just introduced it over to Europe. Little reason how he figured it out and introduced it. He wanted to know how many bunnies he would get, starting off with two, if they reproduced all year long. And during his little figuring it out equation wise, he ran across the Fibonacci series. So if you ever see bunnies running around, that's where the hell he figured it out from. It was actually discovered in India, I believe. It wasn't discovered in Europe, but it was brought to Europe by this gentleman, and he made it widely known, I guess you could say. So basically, all Fibonacci is, and when we're going to get into trading, we'll start. Fibonacci is based off of price moving up, then down a certain percentage, then back up. So I'm just going to use lines. I'm not going to draw candlesticks or anything, just to make this very simple to explain it. We're going to look at price moving up so you can kind of see what it is. What Fibonacci is price moves up and then down and then back up again. Now, some people, and we're going to get into it later, but first I want to explain how to do it. Some people use Fibonacci, I guess you could say, completely wrong. They do it one-sided or a weak Fibonacci, or they just do it wrong, and hopefully we'll get into that as we go. Okay, so Fibonacci is made up of four movements. A, B, C, and D. Okay, so for Fibonacci to be valid, the A to B movement, you should normally be able to spot that, and I'm going to show you how to spot that using zigzags. Again, guys, if you have questions, just let me know. I am recording this, so if sound cuts in and out, don't worry about it. I'll be posting it up. I'm also going to post up some indicators when I'm all done, and I get it uploaded to the forum so that you'll have some tools to help you learn it, because the way I learned it was first by using indicators that automatically drew Fibonacci lines for me, and now I can draw them myself. We'll get into that a little bit later. So back to this. Fibonacci, a proper Fibonacci setup is made by three movements, which give you your fourth, which is an expected point of reversal, or if you're trading forex, it's when to get out of the trade. Now, a proper Fibonacci movement will go A to B, which is your first movement up. Then price is going to drop. It's going to drop from B to C. It is a valid Fibonacci movement as long as C does not drop below A. So if price would have gone like this, and it would have breached below A, that's not a valid Fibonacci movement. It has to only be the downward movement has to only be a portion of A to B. So B to C cannot be larger than A to B. Otherwise, it's no longer a valid movement. So A to B, then B to C. Then what you do is once, and I'm going to show you how using zigzag tools, once this B to C movement is done and price starts moving back up, then all you're doing is sitting and waiting for price to come up to D. And if you're trading binary options and if you're looking for like reversal or pullback trades, this is going to be your target up here for price to hit here. It's pretty simple. I'll do it again if price moving downward, just in case no one got it. So if price is moving downward, first we want price to move downward, and then we want price to move upwards. Again, if price moves upwards here beyond the first initial movement, this is not a valid Fibonacci formation. So we would want price to move up and then price to move down. And again, so we get A, B, C. As soon as you can identify this pattern, all you're waiting on is price to get to D. Once it gets to D, that's where we're going to be looking for a reversal or pullback. Now, this by itself is an okay tool. It's not the greatest by itself because you have to take other things into consideration. But I'm doing the webinar so you can, because a lot of people, if you add this into current systems, it's a good way to see potential reversal points, especially if you combine it with other indicators such as pivot points. I have to sneeze. I'm going to try not to. One sec. Oh God, sorry. Okay. So what was I saying? Okay, so with Fibonacci, by itself, it's a good tool. But it's best and used with confluence with other things. So if you're using it with RSI and D line up together, great. If you're using pivot points and D line up together, great. I would not recommend using it by itself. And if you're in a heavy trend, I mean, just ignore this because it's probably going to blow through your D point. So before we go on, does everyone understand that the B to C movement cannot be greater than the A to B movement? If not, I'll try and explain it a little bit different. But for a valid Fibonacci setup, it has to be A, B is your first movement. Second step, price goes the opposite direction, B to C, but it does not go past the initial point here of A. If it does, it's no longer valid. Okay, once we have C, we just wait for price to start dropping back down, and now it's just a sitting game, wait for price to get there. If at any point, if price moves from like C and it goes here, and then it goes back up like, if price would have gone back up like this, then no longer a valid setup, we're waiting for a new one to form. Hopefully that's pretty clear. So now we know what a valid setup can look like. Let's go back. We'll take a look at a couple charts and see what we can find on the charts. Once I can show you a couple on the charts, then we'll get into some indicators and how to draw them manually. Okay, so we have here, this is cable, and it's real live, no blah blah blahing. If we look back, we have a movement up, a movement down. We don't know where this is going yet. It could move up, it could move down, but what we're looking for is price this line here not to breach lower than this. If it does not breach lower than this would be a valid Fibonacci setup, and we would be looking for price to move up that way, and that would give us our D point. So real quick so you can see it, we'll plot what I'm looking for. This is not a valid setup yet, as we're not getting price moving up yet. But we could draw a Fibonacci line on it. But first let's identify our ABCD. And this will be A. I hate that this is so hard to draw with. B, and that's the wrong one. Let's use this one. B, we have C right here. And I'm going to pause, and we're going to go look how to draw Fibonacci based off of what we got here. So how did I get the red lines on here first? If you go into your indicators, and this is a stock indicator with MetaTrader, so everyone has it. Go to Zigzag. Just go into Zigzag. Using for inputs, I'm using 1253. You can use other settings. On the 5 minute, I recommend 5, 3, 1. Doesn't change anything here, but it basically means it'll follow the price a little bit closer. So in order to get your zigzag on there, and this is, I'm going to show you how to draw with zigzag, and then also I have a auto indicator that'll do it with ABC 1, 2, 3 patterns. But for now we got our ABC here, and we think price is going to go up. So what would we want to do next? If you go up to your drawing tools, and it'll have like an arrow, a crosshair, it's where you get your vertical line, trend line. You're going to have one that has an F with lines on it. If you hold the mouse over it, it'll say Fibonacci retracement. Now, when you plot, you always plot from B to A, and what we get is our Fibonacci lines. So we get a bunch of different levels here. I'm going to get into the levels in a little bit, and what I pay attention to, what I don't. Okay, so we have A, B, C. So where do we think price is going to bottom out or top out at? Would be 161.8. 161.8 is your key number here. So we can plot D right here. Now, a lot of people take into account how far down this retraces, and they say, well, if it's a 61.8 retracement, then it's going to go 161. If it's a 50%, then it'll be like 200, or for now, ignore all that crap. What I really would advise, and I say ignore it because it gets a little too complicated, and don't overcomplicate it. Just go A, B, C, D, be aware of 161 is, 100 is, and where your zero line is. Because if this price, and right now we have a somewhat, if we look at the market, it's somewhat downtrend but a little bit ranging. The key factors you want to look at here when using Fibonacci: A to B is your first movement, then down to C. From here, price can do one of two things. Since we already see that the zigzag is stopped here, if price dropped down to zero and it was overbought, oversold, then that would be a good reason for a reversal point. So Fibonacci is just not used up at the 161. If you're in a ranging market and price hits 100 and you have a lot of good confluence and it goes overbought, oversold at 100, that's also a good reversal point. Now, if it hits 100 and it's not overbought, oversold, and it still has plenty of room, your next expected reversal point would be 161.8. There is a 127 level in the middle of this that some people use. I don't find it as reliable. You won't get as many trades doing this type of system, but oh well. I mean, honestly, if you're just be patient, stick to the basics of it. Of once you have your ABC pattern identified, if price drops to C, goes overbought, oversold, you have a good chance with some confluence. Again, I use like RSI, pivot points, Math Murray, whatever you want to use there to help identify confluence that zero is going to hold and price might reverse there. Again, same thing with the 100 and 161. Your key is where does overbought, oversold kick in relation to the Fibonacci lines. The Fibonacci lines will hold very well. Let's see. I'm going to reload the template real quick, and we'll go back and look at one more. Fib. Okay, so we have one other Fibonacci here. And if we look at it, here's A. My hands are cold and I'm shaking, so B, and let's go to C. So yeah, I'm an idiot. Lock, delete. Okay, so this one's already completed, so let's take a look at how it reacted to the price. Okay, so here's ABC. Now we want to draw our Fibonacci. So again, we click on the Fibonacci retracement tool. From B to A is how you want to draw it. And if we look at it, and I'll zoom in a bit. So here's A, B, C, and here's where D would be. This line here, this is your 161 line. So did it hit it perfect? No, but what did price do as it approached it? It reversed. Think of Fibonacci lines exactly like you would a support and resist, any other type of pivot line. It's more like a magnetic area. It's not exact because remember, the market's based off of orders. Some people are going to place their orders above a zone, below a zone, or right on the zone, depending on how they trade. So you just need to be aware of the area that price is approaching, and if you see it reacting to it, then great. Let's do something real quick just to demonstrate. Let's try. I'll throw some Murray math lines on. If they don't line up, they don't line up. But if they do, maybe we'll see a little bit of confluence and how you can understand they're used. So 6, 2, 5. So they doesn't really line up. We get a line below it, and we get one above it, and here. So in this case, if price would have approached here, you might not have wanted to jump in because you really don't have too much confluence. We could try something like RSI, and let's just do period 4. If we look here, price was slowly starting to get into overbought, oversold when it hit here, so you still wouldn't have had a real clear picture. But hopefully you're getting the idea how you can combine a couple things with Fibonacci to get some good results and be able to predict when price is going to bottom out and go back up. Let's take a look at a couple more just as an example. We have one forming here. Hopefully you should be able to see it. This is A, B, C, and here's D moving up. So I'm not going to draw the letters on it. When we draw, we always go from B to A. And let's zoom out one. So here's B to A, and here's our C movement down, and our upward is D. So let's plot D, and then let's take a look at a couple of the possibilities that we have on here. So here's D all the way up here. Now, what's the likelihood of price getting back up there? Not so good. It would take one hell of a move up. So what would you probably want to focus on with Fibonacci would be the 100 level. If price gets back up to here and it's overbought, oversold, I would definitely be looking at it because the likelihood of it getting up to here and one signal movement is about 0. And again, how would you take a look at 100? You can throw RSI, stochastics, whatever you want on there, just so you know when overbought, oversold's coming in. We have one small one here we can take a look at if you want, or we could take a look at this big one too. Let me load up a template, and we'll take a look at one more way of looking at it, and then we'll get into some of the indicators you can use to also get this automated for you. Again, I'm going to post the indicators and the forum post when I'm done. I'll give a link out into all the chats for it too. So template, let's load up a blank one again. So again, this is all I'm using is zigzags to draw this. Let me turn off auto scroll so I can get back to it. Auto scroll. Goodbye, auto scroll. Okay, so we have a nice one here. Price went down, up, and then down. So I'll label them this time. A. If you have any questions as we go, just let me know. Again, I'm recording it, so if you got in late, don't worry about it. I'll post up the indicators I'm going to show here shortly in a bit. Okay, so we have A, B, C formed as price moves down. One of the things with Fibonacci, don't rush it, because look at the amount of time here. From the time C formed, and if you were watching it, we have 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55. You have almost a damn hour. So you can have Fibonacci on your screen and not be rushed. We'll draw our Fibonacci now, again, from B to A. So we had price move from A, B, C as it's moving down, and 161 was down here, which was D. And then I'm going to throw something on the chart, and we'll take a look at why we might have looked at other areas. D, let me get it. So D is all the way down here. So again, if you're looking at it, what's the likelihood of that happening? Probably not too good, and price didn't get anywhere close to it. Let's throw, and I'm sure everyone's seen this indicator before, we'll throw value charts on it. If I can find it. And we're going to go back and review this and where you should have been maybe looking. That's not value charts. Jesus, I'm all screwed up. Sorry, give me a sec. Okay, so this is value charts on there. Now, we're going to go back and let's look at it again now. So here's A, moves down to B, comes up to C, and then as you follow price down to D, remember I said 100 is an important level. As price approaches 100, and this isn't going to be 100%, it goes into overbought, oversold. Here's when it hits 8 on this candle. And let's see, and this one. So this would have been an area to watch. Now, again, we're just going overbought, oversold, and we have down to C is 100. Your key areas to watch here would have been 100 right there, and 161 down here, which it never reached. It bottomed out right here. Hopefully that explains a little. If not, we can always go with one more indicator. So we went overbought, oversold here, and along those lines, we're at a 100 level, so we could try Murray math again. You're just trying to create a reason to take the trade or for price to stall out. Is it going to work 100% of the time? No. But if you use Fibonacci with other indicators, it can help out a lot because it will create confluence, and it kind of help you understand how the market is moving. So if we looked at it, at the 100 level, we do pick up. Do we? No, that's the price. Durr. I think that's price. Yeah, that's price. So on this one, for me, I wouldn't have taken any trades here at all. The closest it would have got was here, and nah. So did Fibonacci help it out all here at all? Sorry, I can't talk. Not really, but it's good to have it on the chart because when it does line up and it does give you good confluence, I mean, you're really going to like it. Another one you should be able to spot, here's our movement, A, B, C, down to D. So simply B to A again. Price moves up, down. What did we hit? We hit 100% retracement and price bounced. 161 was way down here. Is there a chance that it moves back down to that? Maybe, but if you were watching the 100, it did react to it. See how price hit it, bounced up. We got a nice little wick on it, and price continued up. Again, you could throw whatever you want on it to try and help you confirm. If you wanted to do, again, we'll try RSI. When price hit here, it was definitely overbought, oversold, and you hit the 100 level. So that one did give us some nice confluence to let us know that the 100 level would be our bounce point, overbought, oversold, plus the 100. Before I get into indicators, any questions on how to draw them, how to identify? The BC movement cannot be higher than A. It has to be a percentage because that's going to tell us how far down it moves. In about 2 weeks, I'm going to do a more advanced one on how you can actually use these numbers. But most people don't even understand how to use Fibonacci at all when they get into it, and it's just confusing for them. So what I'd want you to focus on again first is your key levels are going to be 0, 100, and 161. Ignore the rest of the numbers for now. It's going to confuse you. Just start paying attention to them if you plot them on your chart, and watch how price reacts to those 0, 100, and 161 levels when you go into things like overbought, oversold. How am I doing it? Okay, can you see where my mouse is up top? It says Fibonacci retracement. Okay, so you click that button. Let me clear this out. Template, fib. Okay, so the first thing, in case you missed it, I added zigzags to the chart. Zigzag is all the way down at the bottom. Everybody gets it. You can do 12-5-3 or 5-3-1 for a 5-minute is what I recommend. Again, it doesn't always change. I just find it reacts faster to the 5-minute chart. So first step, if you're going to be drawing them manually, put the zigzags on there. As you get better with this, you'll start recognizing, like with some of the indicators that I give you, that they're drawing it wrong. So you'll want to just say screw that and draw it yourself. Again, most of the times when you draw Fibonacci, it gives you plenty of time to draw them and then just wait for price to react. Don't try and draw them at the last minute. It'll screw you up. But anyway, you should have a button that says Fibonacci retracement. If you don't, just right click in the tools section, go to customize, and over on this side you'll find Fibonacci. Right now it's over here. It's called Fibonacci retracement. It's already in the selected column, but if it's not, it'll be over here. So if you don't see it, see how it's gone? Right click, go to customize, find Fibonacci retracement, go to insert, and there it is. So it's just an F with a bunch of lines on it. You click it. Now when you click it, the cursor will change to a bunch of little lines. So we're going to draw from, here's A, B, C, and D will be down here somewhere. We're going to take it from B, move it up to A, and then release it. MT4 will kind of pick up the tops and bottoms for you, so you don't have to be totally exact. Just drag and drop it, get it as close as you can. So we have A, B, C, and on down to D. D would be down here at 161. What's the likelihood of that happening? Again, not looking so good, but here was our 100 mark, and I think I showed it overbought, oversold with RSI. So that would mean overbought, oversold. Look for a reason for it to bounce. Fibonacci combined, you get a good reason. Did that clear it up for you, Edwin? You know how to draw them now? Okay, cool. Remember, it cannot. Where would you take the trade using the fib? On this one, let's say if I had, let me load up a couple things that I'd have on it. RSI is a great combination with it. You can use period 3, period 4 since you're on a 5-minute. You can go overbought. I do 80-20, but this is 70-30. Let's do it 80-20 and see how it looks. And let's go into levels, and we'll do 20. 80. And let me make the line down there pink and ugly so you can see where it goes in. Okay, so you can see the pink lines here. This is RSI, I think, 3, and the pink line is 2080 levels. So if we were watching it, here's A, B, C. Now what am I doing after I get my ABC set up? I wait for price to go into overbought, oversold. It went here, overbought, oversold. So I would look at it, and what do we have? We have 61.8. Again, I'm not going to cover that one today. Let me cover this one, and then we'll get to your question, Barry. ABC, price goes overbought, oversold right here. That was a 61.8. Again, we're not going to cover those. I'm not going to get too much in detail. First, learn the basics of 0, 100, 161. So price comes down again. Here it touches again to the 20 line on RSI. It's overbought, oversold. It hit 100. For me there, because 0, 100, and 161 are all very good support and resist numbers, it's overbought, oversold. That would be a sign to get in. Now, why else is it a sign? Is because this chart is not trending like crazy. It's ranging. Fibonacci is kind of identifying the range here for you. And you see how it's not trending? If it's trending, this becomes a little bit more difficult, but it can still be useful. But it helps on any type of ranging market system. This can help you a lot into staying out of stupid trades. But basically, my point of entry would be right here. The horizontal line. Why? Because it hit 100. My 161 mark was way down here. I went overbought, oversold at 100. So that is a good confluence for me. You can add other indicators on, again, like pivots, whatever you want, to help you identify these spots. But 100 is a good support and resist with a combination of overbought, oversold. So that tells you, yeah, you can get in. What's potentially happening here is you have another Fibonacci line, and this is going to get a little complicated, but just so you can see what I see. What I see here is this. After the trade, just so you can understand what I see. What I see is another Fibonacci forming. The zigzag tool won't pick that up. Like I said, after a while, you'll start noticing them on your own. That's why it's good to use the zigzag and good to use indicators. They'll start identifying them for you, and then you're going to say, what the hell? I see it right here. A moved down. Here's the bottom of B. Went up to C. So what I could do then is redraw my Fibonacci and wait for the next setup, which would be, I drew it wrong. Yeah, I'm an idiot. One candle trade. I do 5-minute trades, yes. If I'm using forex, it's a little different, but this is just strictly for binary options. You're looking for immediate pullbacks when it hits these levels. Reason you're looking for an immediate pullback is because by using Fibonacci, it's what a lot of institutional traders use. So if price reacts to that 100 level, overbought, oversold, price hits 100, and price reacts, that means real traders, the retail traders, institutional traders, banks, hedge funds, this area probably has orders sitting on it. So remember, all you're trying to do when you're trading binary options, you're trying to identify an area on the chart. This is all your indicators are. They are just visual representations of where orders may be sitting on the chart. When I take a call right now, A, B, C, it's going overbought, oversold, and it's hitting 100 again. We're getting a little bit of a pullback as it hits. I would be looking at the close of this candle. So how much time do we have left on it? We got 1 minute left on this candle. It's reacting a little bit. See how it's pulling back? I use more on my charts than just this, but from what I can see on the chart now, yes, I would take a call for the next. Well, I'd be waiting for the last. I don't have my candle timer up. See how it's now we're getting our pullback. I try and enter in the last 10 seconds because I want to see almost all of the candle movement. Let me say it now. If there's a pullback, yes. If it drops all the way down, no. So if there is a pullback here, and the pullback isn't too far above it, so we had a pullback, it would have been a yes. So hopefully this would go up. Remember, this isn't my full setup, but from what I saw here, we have a pullback. when it hit 100. So what does that mean? It means that at 100 there were orders sitting there. Price would not have pulled back if orders had not been sitting there. So we do know there's orders there. How many? We don't know. But there was orders there, and price did recognize there was orders because we got a pullback. Are there enough orders there to get a reversal? We don't know yet. We'll see right now. If you want, we'll leave it on this chart for a second, and we can watch so you can see. While we're waiting, I'll go over a couple more things while it's doing that. Any questions so far? And do you understand why I said yes? Why I wait till almost the end of the candle to get in? I want to see if price hits it, and there was a few orders there, so it bounces up, but then 10 seconds later it clears out all those orders and price continues downwards. So if you get in the middle of a 5-minute candle at 2.5 minutes, and this will work for you and against you sometimes, but if you get in the middle of a candle at 2.5 minutes, it hits that order, it bounces back up, then all of a sudden people say, well, all those stop losses or all those take profits were cleared, and people start placing their orders again. They're like, it's clear for us to drop it some more. If the previous candle was a flat bottom, what does it mean? If it hits this right here, if it hits the 100 and it flattens out, no wick on it, it means there was no bulls present in the market. It means the bears just pushed price down and it closed out that there. So the bulls were in charge of that candle. Let's zoom in a little bit and take a look. On this candle, and let me stretch it out a little bit so we can see it. Nice and big. If we look at this candle, the bears, and this is getting in a little bit into kind of price action and candle sentiment, but I guess it helps a little bit to understand. This candle, the majority of the time, was controlled by bears. It was being pushed south. But when price hit that level, all of a sudden you saw the bulls come into play. All that means is there were orders there, price got pushed back up. Simple as that. It's one of the basics of price action you can look at. Let's see if we can. If I switch to 1 minute, I'm going to lose a bunch of stuff. We'll come back to it. Here was the 1 minute candle. We are 2 minutes in. So price, and here's still the 100 line right here. Price was moving down, down, down. When it hit 100, it moved down, and then it dojied out. So if you want to do price action, we got, what is this, a freaking morning star or whatever, which on the 1 minute chart indicated price was going to go up. We still got 3 minutes left in this candle. But if you look at it on the 1 minute chart, remember, inside a 5-minute candle, the 1 minute candle can tell you the story of the 5-minute candle, and it goes that same way. This is the same pair. All I did is switch to the 1 minute. This is the 15-minute candle. 100 still, this line is holding up. Here was 100 on a 15-minute. It hit it and pulled back up. So even on a 15-minute trade, we're looking at a good trade. 3 time frames are telling us, the 1 minute, the 5-minute, and the 15-minute. And I didn't have any of this information beforehand. 3 time frames are telling us there was orders sitting there, we got a nice pullback, and it should go up. On 3 time frames, we were oversold. Kind of simple there. Does that answer the question on why we look at the price action a little bit and how it reacts to a level? If we would have got a bottom out candle like this, and we have one here at 61.8, and price bounced up again, so it's not always going to be perfect, because we had the same conditions right here. If we look, we had a bottomed out candle, it was overbought, oversold, and it hit 61.8. 61.8 is an okay level, but again, like I'm saying, we're looking at a ranging market. So if it's a ranging market, you want to key in on 0, 100, and 161. If it's a slightly trending market, 161 is going to become more important. But on a ranging market, 0 and 100 are going to be some key levels for you. So this is 1 minute left. We'll let it finish up and see. Now, entry-wise, just to cover that, entry-wise, you would want to try and get in slightly below the 100. Above it, because we know that there was orders there, and that's where it reacted to. So if we get in above the 100, that would just be pure stupidity, because we know they could probably drop it back down to 100 pretty easily. So our entry goal would be anything below the 100 point for binary options, because even if a shitty entry slightly below 100 would probably pull an ITM out. Anything above it, they could probably squeeze it right back down and doji it out. Candle's about to close. Looks like it's got about a minute left, a little bit less than a minute. Before I show indicators, okay, lag. Do we have any questions since it was lagging? I didn't really want to get into price action, but we did there. So that's a little bit of price action. I'm actually going to be doing a price action thing next week. Price action isn't difficult, and everyone considers price action different things. Shit. Oh, now I cussed in my video. Oh well. Hopefully that shows it. So a little bit of price action. We had a line at overbought, oversold. Ranging market with the 100 level is your key there. Remember, if we are trending a bit, 161 will come into play. Ranging market. Try and focus on 0 to 100. Easy. Let's move on. Clear this crap out. Let's look at some of the things that can help you learn how to draw Fibos. Indicator template. Let's wipe it again. Okay, so all the indicators I'm showing you, I will be putting them up on a forum so you can download them. None of this is charged. It's all just free shit. I mean, God, it's hard enough trading as it is. Okay, so the first one I'm going to show you, and this one was designed by someone named Theory. He has two. I have two versions of it. Let me find them. Okay, so there's two versions of this that I'm going to show you. Now, the first one is Chart Autofib version 6. It does a very good job, but I believe it forgets to update sometimes. Same thing, if you go down to the bottom, 531, it's already in there. But if we look, it will draw them for you. This is the one that I have modified, so skip it. But, here, let me do, let's bump up. There's the 100 level. 0, 50, 61, 100, 161. So it drew them exactly as I did off of this zigzag. So this is a zigzag-based Fibo indicator. I'm not going to really get into the settings. I will post it on the forums for it. I just want to show you some of the tools that are available. So if you're going to draw a zigzag, or if you're going to draw Fibos using zigzag, this is a great way to do it. The only known issue I have with this is that sometimes it will fail to update and draw to the next zigzag. Let's get rid of that one. We'll take a look at another one. That's version 6. There's a version 4, which I know I don't think it has any bugs, but it's just not as pretty, I believe. Again, 531 right here. You can do, if you do I already have it hard-coded, but so this is 531, but it draws the numbers on the left-hand side. Same thing. If we look, here's 0 and 100, and here was 100, or bounce up. It didn't catch the one that I drew, if you notice. So that's what I mean by great to use indicators, but remember, this was my Fibo that I caught because this was an end to it, because this Fibo was no longer right here, came down. Now it's approaching 161, so there's a lot of ways you can look at it. This is approaching 161 already, where I said, not too likely. Well, it's doing it. So Fibos, there is some, what do you say, you have to put a little bit of thought into it, but as for starting off, I would definitely recommend just use an indicator so that you can start to recognize the patterns, valid patterns. Don't use some of these bullshit indicators that are out there that draw one-sided Fibos. Like, it would draw a Fibo here, and it would give you an up here as a target. Not appropriate. Indicator list, let me kill this one. The last one I'm going to show you draws them different. So we've seen what's on the screen now, and how right now it's drawing it off this to here to down. The one that I use, and let me find it, 1, 2, 3, patterns, V2. This is the one I use. That's not going to work. It's saying I have a... Let me kill that. Maybe it's this one. Here, I got a different... let me load up mine. Tab. Okay, so this is the one I use, and I'm going to put up the version of it. It will be missing one thing on it, but that's something that I had custom coded. Okay, so if you notice on this one, and this is the one I use, it picked up the swing that I was looking at. This one is based off of 1, 2, 3 patterns and not zigzags. Let me change the colors so you can see. I like this one personally the best, and it's going to be the third one in the list that I post. Let me change the colors real quick so that you could see. The pattern's going to be in blue that it's picking up. And let's just go to white and white. Yours will not have this PRP up and down thing. That's something that I had custom coded. Okay, so the white line is just it projecting which way price is going to move. The red line, remember, is our zigzag. The way the zigzag one is drawing it was from here to here to here and then down. This one, since it's picked up on the pattern that I did, that's why I like this one more, because it picks up on what I see a little bit better. It's optional, whichever one you use, but this one picked up from here. A is here, B is here, C is here. Here's our 100 that we did, and here was the pullback that we saw right here. So that picked up exactly what I saw. It's up to you which one you want to use. It really truly is. Some people don't like this one. You can get rid of these lines, but I would say, if anything, get rid of maybe the white line. Pattern low. Let's make that disappear. And I'm going to kill zigzag so you can see what it's drawing off of. Just this way. Everyone saw the difference in how these draws. One's a zigzag and one is a 1, 2, 3 pattern. I'm going to remove zigzag. Okay, so this one picked up on a 1, 2, 3 pattern. Let's move back to candlesticks for you so you can see. This picked up on the 1, 2, 3 pattern exactly like what I drew, because off of zigzag I saw another Fibonacci pattern forming in it. So I'm going to post those 3 indicators up for you. The last indicator that I'm going to cover is one that draws previous day Fibos. I actually consider this one a pretty important one. Chart. And it's going to be called Chart Daily Fibos. Again, this one's by a gentleman named Theory. I don't know if he's around anymore or not, but yep, I'm going to be posting these. Okay, so this one, and let me clear off the Fibo, and I'll explain how this indicator works so you're not confused when you get it. This one draws Fibonacci's based off of the entire previous day's movement. So what we'd be looking for is it to line up, and it creates confluence with. So let me mark our trade that we looked at and we took, for instance. That was the one that we took. 138.2 was a previous day's Fibos. Now, since these are previous day levels for the entire day, they're actually a little, in my mind, they're a little bit stronger. So if you can line up a previous day's Fibo with a current swing Fibo, and then line up overbought, oversold, already now you have 3 reasons for a reversal. Include a little price action that could be 4, do pivots, whatever, maybe 5, 6. The idea here, the way I trade, is called confluence trading. You stack the shit out of reasons, you get in a trade when you have those reasons. I mean, if we look just for the hell of it, this is my chart, and I know it's a little bit messy, but that's the candle right there. And that was the pullback. Here was the 100, a couple other things. But, I mean, I'm not bullshitting. This is exactly the way I trade. There was the overbought, oversold right here. So that's exactly how I trade. So if I can do this, and I do this full time, I mean, you should be able to use a little common sense, some practice, learn how to use them, and do well at trading. One of the biggest things I can say is don't fight the market. If it's trending, this shit's going to fail you. The 161 will come into effect a little bit more, but if it's trending, be very careful, because a lot of time levels are going to be getting blown through. Remember, when price approaches a level, if it doesn't react to that level, in the real world, there's no orders there, so you shouldn't be touching the damn thing anyway. Stay away from it. Use a little bit of price action skills. The first one, when people say price action, the first thing you should be looking for as a price action skill, does price react to the level on your screen? If it doesn't, there's no orders there, move along. Is that going to be perfect every time? No, we might get, just like we saw here, price bottomed out and reversed on us. But if you're using it and you're stacking your reasons, it's going to help you out a lot. Let's get back to the chart daily one real quick so I can show you what's on it. I got carried away there on preaching. Prices on this one are going to be on the left-hand side. So we have level 0. Key levels, again, we have 161 in bold. And up top we have the 100. Way up here we have 161 again. Your key levels here are going to be the 161, and you can tell they're key levels because they're bold. 161, 0, 100, and 161. Those are going to be your strongest support and resist that you have based off of daily Fibos. Your 61.8s here, when I do advanced Fibos, I get into all that crap. I don't want to confuse people. I want to keep it simple. So remember, normal swing Fibos, key levels, 0, 100 on a range, 161 on a trend. Combine it with something else to help you decide. Daily Fibos, 161, 0, 100, and 161 up top. Those price should react well to all those levels with confluence and overbought, oversold conditions. Trying to think if I missed anything. Any questions while I think real quick? The upload, since Time Orders sucks ass where I live, and they're freaking got me throttled down to 1 megabyte up, will probably take about 30 to 45 minutes, and then I'll post in all the rooms the link where all the indicators are. If you have any questions, please post